Recording in progress.
So in a previous session, we already discussed that usually when the market leaves the Asia range high unmitigated, or I would say it's not sweeping the Asia range high, it's just a matter of time until the market would eventually take out the high of the Asia range. And that's one of the reversal patterns. So if London would be, also in this case, London was bearish, but the Asia range high is still not swept. So we see this bit in the market as liquidity. Then we should be expecting New York to make a reversal. So we should be expecting a reversal pattern somewhere around this gray shaded area, or you know what, somewhere around this level. So the market is already in a reversal point of interest level, and I would be expecting for the rest of the week gold to be pushing higher because of the headlines and the news and the fundamental analysis we have at the moment. Now, this level, this gray shaded area, this is actually a breaker, excuse me, not a breaker, it's actually a mitigation block. So I selected this candle, and this candle, you might be asking why this is the mitigation block. Now, the mitigation block is slightly similar to the breaker, so it works with the same idea. But here is the difference. So the breaker would be looking something like this. The breaker usually is a reversal of the market. So we would see a candle that's right there, that was previously an order block, showing us a continuation in the market, but the market broke the order block candle impulsively and broke this structure, and that's when we would expect a pullback in the market. Now, also something to notice in the breaker would be we need the market to sweep this high. So this high, in order to have a valid breaker, we need to sweep this high by a new high, and only after that drop down and clear the order block with an impulsive move. So we should be seeing an impulsive move in the market. Now the breaker has the difference. It's rather a continuation instead of a reversal move in the market. So we would see a candle we would see an order block candle here, and that would be broken again with a strong impulsive move. And if that happens, we should be seeing a pullback to this candle previously seen as an order block, and we would like to see a continuation after the market makes a pullback to the mitigation block. So this would be the main difference between a breaker and a mitigation block. So this is what I see at the moment. So if I so this was previously seen as an order block candle to take a possible short, and now we rather see it as a mitigation block. So the market broke it with this impulsive move, and we would like to see, and we would anticipate a pullback to this area, and then the market to continue higher. So that's what I expect right now, and essentially this is the gray shaded area that I marked up right there. So this is my ID. Also, something that's quite interesting, the market obviously now took out these sell stops, and that's quite interesting, because if the market takes out sell stops before the actual move, that's even higher probability, because in this case we would be able to use optimal trade entry like that. So maybe we would see a lower push to the 62 level. It's also possible. It's also possible to fill in this week in the market before moving higher. So it might be filling this week next to the impulsive move. So we might see a push to this level and then continue higher. It's also possible that the market will start making the reversal now in New York, and for the rest of the day continue higher, and tomorrow we might see even higher prices. So that's something I would be expecting right now. And obviously take out these highs and push higher to a level which I have in mind, which would be this level. Now, I've been looking at this candle for a very long time. It's such a clean supply-demand area. I've been looking at it a long time, and obviously fundamental news in the market would drive the prices higher. This would be a level I would like to see in the market to be completed with a higher push. But obviously this is a higher time frame analysis. So this would happen probably, I don't know, a few months later, but higher time frame buyers for me will remain bullish in this sense. Now we just have to
can I ask a question?
Yes, sure, ask me anything.
In this case, we have also a confluence about the mitigation block. Go to H4.
Yes, so H4 is...
So we have an additional confluence about mitigation block, and in this case the breaker. So this is an important level. Is correct?
Yes, that's definitely correct. So also something as a confluence for this to be an important level would be, obviously using this tool. So a bunch of confluences that this is an important level. So yes,
but this is breaker, yes.
Yes, maybe on a lower time frame it is. Yeah, maybe we could call it that. But it's
okay. Thanks.
For me it's not a clear order block. So I will be honest, I haven't seen order block candle here previously. But
sorry, breaker.
Yes, but what I mean is usually the breaker should have an order block candle that was previously an order block. So if you look at this one, this was previously an order block. So the market was looking like that. But then we broke it with an impulsive move. So, for me to have a valid breaker, I would first need an order block candle that's looking like an order block. But here I cannot see something like that. But if we consider the structure in the market, this bit, we could say this huge bit, but not something like that. We need to consider then these three candle, and then we could say that, all right, the market here took out this low and then with an impulsive broke it. So yes, we could be saying this is also a breaker. So yes, I would rather say it is. And
okay,
thanks for bringing that up. Thanks for mentioning that. So yes, that's my analysis on gold actually. So it's at the moment it's all higher time frame. Obviously lower time frame confirmations will be observed by me. Yeah, so still not something where I would take a trade at the moment, but this might be a little bit these weeks, some money left on the floor, but yeah, this is my higher time frame analysis and bias for gold. So I expect still a higher push and take out this angel range liquidity. Let's discuss GU, GB, GJ. No, I'm not looking really at that. Just the reason why this was opened up because someone just mentioned GJ a few days ago. Now Euro USD, I'm still having sort of a bullish bias. Now we had this breaker, and we could say still respected, so it only wigged down a little bit, but the candle is still respecting the breaker. So until the market would not drop down with a close candle below this level, I would still hold my bullish bias. And I would like to see the market to trade up to this level. So this would be a level that I would like to see the market to trade up to. This candle, it's very safe to say it's a clean supply demand area. And these three candles, it's safe to say, is rather like an order block. Also, I have actually a higher time frame analysis with a fib level. So this will be a fib level. It's 38% fib level, and that's usually something that works on higher time frames. So the way it would look like, so this level, obviously this is just higher time frame analysis, but the fib level wouldn't be the level where I'm taking the trade. I'm just using that as additional confluence, because many times the market, especially on higher time frames, it would be giving a good reaction to the 38 level. So this is not a level that I frequently use. I'm only using it for higher time frame, but if anybody does a little back testing for this level, you will see that a lot of times the market would be aligning with, in this case, an order block. So it's for me a confirmation that this level on the weekly and also on the monthly. So as I said, it's something that I use on the higher time frame. So on the weekly and monthly, it's aligning with this daily and this 4-hour supply demand order block area. So it's still a level that I'm interested in for the market to trade up to. We actually had previously these highs seen as equal highs in the market. That was obviously taken. It was huge liquidity, so it had to be taken. My first idea was the market to hold these equal highs and then the market to trade down here, and after that explode above these equal highs. Now the market took those, so it swept those equal highs with a new wick. It was something that could be expected because it was a lot of liquidity. But this particular wick, it wouldn't make any difference in my bias yet. So I would still see this level as liquidity, because I would like to see the market to fill in this imbalance candle here, and also the market to reach this area. So it's just a matter of time to trade up to there. Now this is the higher time frame bias I'm having, and now we just need to look at lower time frame confirmations. Now on the lower time frame, the market actually just broke the structure. So we know we have shift in market direction. So from the bearish, it's very likely that after a pullback to this area, we would very likely see a continuation. So a pullback to here and then a continuation. So that's something that's possible. So it's something I would be expecting. Let's just mark up the Asia range too, what we can see there. Fire. Okay, it's not something we can use. Regarding this, we might see. Now, this is one of the ways I would be probably saying that, all right, this might not, this is actually the thought process I have. So once I place this Asia range here, I have a feeling that this is still liquidity in the market. So we might see this as a trap, and we might see the market to trade below this level. So this candle, it might fail. So it's not something I trust at the moment. So sorry about saying to take a long from here. So I kind of changed my ID because I have a feeling that this Asia range will still be liquidity, and we might see the market even trade, around 1 or 2 standard deviations of the Asia range down, and maybe even sweep this low like that. And if this happens, so if this candle fails, we might see the market to trade down 2 standard deviations, and then it's very likely for the market to reverse from here if we still hold the bullish bias. And obviously this might turn into a smaller trendline liquidity, and that might happen actually. So this might actually happen, that a lot of guys might take the trades from here like that, and this candle, it might fail. So at the moment, I'm just still forming my ID of the market. But if I would consider this Asia range as liquidity, then I would say this candle, it might be failing. Also, we have some news events. Also, it's still just Tuesday. So usually the market creates the high and low of the week on Wednesday. So it would be unusual for the market to have Monday. It's not unusual, because if Monday, Tuesday, Wednesday is bullish, we would see the reverse on Thursday, Friday. But if I would consider the Asia range as liquidity, then this particular candle, it might not have too much success. But obviously I will be keeping an eye on this. So at the moment, we can make price alert. So I just added a price alert to this level. And if the market would be approaching this level, then we could take a look at the lower time frame analysis. So all right, so that's a price level I just set up on Euro USD. Aside that, it's kind of choppy at the moment, so we're gonna wait a little bit more. Now, Australian dollar USD. Now here actually, Again, this is not a pair I look at, but let's see what we got. Okay. One, two, three. Okay, I believe we should see a higher push here. Now this candle is interesting for me. Now this is something interesting. I would be taking a look at this level. Also, this week, it might be just a little bit of buy stops above and push into this level. That's something I would be expecting on a higher time frame. Also here we had something looking like a trend line. That's now broken. Just as additional ID. We also had the market okay. This is actually fair value gap, its level. So I would like to see this level to be filled. This is something I would like the market to trade up to. The importance in marking up these fair value gap levels are actually fair value gaps are not just a level where you could take trades, so you could take a short, but it's a level where you expect the market to fill in this fair value gap. So this is a level that I would expect the market to fill in. So that's something that's adding to my bias. Also now, let's look at what happened previously. So the market just reacted of this candle right there. So it just made a pullback and started pushing higher. It obviously, we have the shift in market structure, and these were actually relative equal lows. So actually this is the thought process I'm having at the moment. These were actually some liquidity. So you see this low and this low, we had the equal low. So it's very favorable for me that now the market took out these equal lows, so these relative equal lows with this strong candle. And after that, it immediately started reversing. So for me, I would expect on higher time frame the market to trade up to this fair value gap, take out these buy stops. So that's my higher time frame idea, and obviously it's just a matter of time to fill in this pink shaded area. If we would like to get a re-entry on this, we could be looking at this. This might be a level that we could look at, and that level will obviously be matching. It's something interesting for us. Let's see the stop loss. So yes, still now 30 minutes. It will offer us mostly about 20 or 15 or 10 pip stop loss. If you are a guy who rather trades on lower time frame confirmations with a much smaller stop loss, then I would be using this area only as a as a point of interest. So this is point of interest. We obviously have these triple bottom. See that? So this candle, that's double bottom. Let's call this one triple bottom, or 1, 2, 3, 4, 4 bottoms. Definitely looks like money left on the floor. So I would see this level as liquidity. And let's say if this would sweep, who knows, maybe we're gonna see like a 10 pip sweep of those levels, which is obviously aligning with point of interest, optimal trade entry, 10 pip sweep. It's looking very nice. And if you would like to wait for lower time frame confirmations, then I would be doing something like this. So it's either, so we have actually 2 lower time frame confirmations. One of them would be this one, which would be a breaker candle. So we would consider this candle as a breaker and then take the trade. The other one would be a strong move down. Like imagine this move would manipulate the sell stops, make a 10 pip sweep, aligning with optimal trade entry. Like that, just adjust it a little bit. So aligning with that, and if we have a strong impulsive move, we can also wait for a pullback, retracement, and then take the trade, obviously, like that. And
sorry, but
yes,
if you put 5 minutes, I see liquidity on 0.71115 under the purple zone. Yeah, here, there. Yes, that to double bottom. I can't hear you now. I don't know.
It's also possible for this to